Sorry, I left abruptly. I had internet problem. I didn't know, then I got disconnected. So are you still here? Do I still have my colleagues here, Giselle, Ernest?
Yes, you are there. You are welcome back.
Thank you, thank you. So I got disconnected. So we were discussing, sorry. We were discussing the budgeting approaches, and we have covered the incremental budgeting, the zero-based budgeting, the program budgeting, and now we have the performance-based. And we said here, the program-based budgeting, it is when the budget is done program-wise by specific programs.
We are not seeing your presentation.
You're not seeing the screen.
Yeah.
Let me share the screen first. So are you seeing it now?
Now.
So you are seeing the PDF.
Yeah.
Okay. Okay. Now, the last one is the performance-based budgeting, where the performance budgeting is defined as the budgeting that links the fund allocated to measurable results. In most of the case, in the World Bank, they use this one. It is important point from this definition it is important to mention that the linkage of budgeting to results of performance requires the comparison of actual performance to planned performance, and then this will help to improve PFM. So we do budgeting depending on the performance. The budget lines that performed better in the current year, then they will be allocated also a larger budget compared to other budget lines. So, and this helps to improve PFM, to strengthen the allocation and operational efficiency. And then this one, it is called yes performance or result-based budgeting. Okay. So how is it done? You may either use presentational performance budget, where performance information is presented in the budget documents. And then we may have performance-informed budgeting, where resources are directly related to proposed future performance or to past performance. And most of the case, when we deal with the World Bank, they use what you call program for results. Okay, program for results, where they just give you money, you complete an activity. Once you complete it, they give you money after completion. They don't pay you before. Okay, these are the types of budgeting. So budget monitoring, this one you can read, but there are some key terminologies that I normally examined, mugomba kumenya mu kizami, the terminology in the budget monitoring, you follow up the budget. For example, in Rwanda, we prepare a revised budget in December. So there are two key terminologies that you need to understand under revised budget. So there is budgeting, there is the viroma and the profiling. The environments or the viroma, whatever you read it, and profiling, these are the terminologies that you need to know. Because for the environment or for the viroma, this is where budgeted funds or money are moved from one budget heading to another budget heading during the budget year. So, which may be, this may be due to one budget heading overspending and another budget heading being under budget. You may take some money from construction, then you put it on salaries, for example. In COVID-19, we may find that the money for mission allowances can be reallocated maybe to purchase of laptops for people to work from home. That's what we call viroma or budget reallocation, relocating money from one budget heading to another budget heading. Okay. Now, again, in budget monitoring, there's what you call profiling. Profiling is the process of just following up how the budget is being implemented. Okay. To see, for example, if you have prepared the total annual budget, you can split across the month so that you can show the timing of the budget spent over the year. It is very crucial in budget monitoring because it will help to determine whether a budget heading has an overspending or not an overspending. That is what you call a budget profiling. It is just making a profiling stage of the total annual budget in specific months, and then you will be able to monitor. For example, the first 3 months, the first 6 months, then you go for 12 months. Then you will be able to see if there is overspending or underspending. You can compare from month 1, month 2, month 3. You see the budget that you have planned to form the basis for the next plan. In Rwanda, the budget monitoring we do, it depends on the number of years. So it is on the year, and we do the budget revision in December. For the case of Rwanda, we do budget revision when? In December. Budget revision is done in December. And you need to monitor your budget to see if there is any change that needs to be made. So is there any question here on budgeting? Because as I've mentioned, I will show you some questions that you need to review. Okay, can we move to Unity 3? Unity 2 is the largest, so Unity 3 will be very fast.
Okay.
And I hope you understand at least what you have covered. So is it adding value to what you have learned?
Yes.
Yes.
Unity 3 is about taxation and other source of finance. Here we need to learn the type of taxes. But before you understand the type of taxes, for the sake of the exam, the examiner will ask you to define what is a tax base and differentiate a tax base from a tax rate. A tax base, we say, for a government to collect taxes, they need to establish a tax base. A tax base is the value. It is a value of an asset, a value of an item, a value of a property, a value of a service, a value of a transaction, on the basis of which tax will be calculated. For example, if we say the tax base for VAT, it is the amount of purchase. If we say the tax base for the tax of pay as you earn, the tax base is the salary. The capital gain the capital gain tax, the tax base is the value of disposed asset. Things like that. That's what you call a tax base. Tax base, it is the value of the asset or any other item, property transaction or service on the basis of which a tax will be calculated. Whereas a tax rate, it is the amount to be applied to the tax base to calculate the taxable amount or the tax payable. Is that clear now, the difference?
It's clear now.
Tax base, we have tax base, for example, we have income as tax base, and the income can be a tax base for income tax, like pay as you earn, the pay as you earn. The tax base is income, like personal income tax. These are the personal income taxes as per the current law, but the new law will be issued, and I think it is 0.60%. Then 60 to 300.
61 to 100,000.
20%.
Yes.
Then
Above 100, 30%.
Above 100, 30%.
Yeah.
Now, in that case, the tax base, it is the salary income or the income. So the tax base can be income, tax base can be expenditure, like in the case of VAT. Tax base may be wealthy. The tax base may be wealthy. You need to know how to calculate VAT. In an exam, the examiner may ask you the calculation of VAT, ukamenya uburyo bakalculatinga VAT nibaguha ikibazo kirimo bavuga ko the VAT is included and they want to calculate VAT, you will take that value times 18 over 118. If the VAT is excluded, you will multiply 18 over 100. You know that?
Yes.
Okay. Now, the tax base may be income, may be expenditure for the case of VAT. For the case of pay as you earn, the tax base is an income. For the case of VAT, the tax base is expenditure. For the case of capital gains, the tax base is wealthy. And now we have the tax structure. The tax structure, again here on the tax structure, the examiner will ask you about tax structure. The types of taxes, depending on their structure. The progressive tax, the regressive tax, and proportionate tax. Okay? You need to know this. Progressive tax, regressive tax, and proportionate tax. Progressive tax, it means that the tax represents a large proportion of individual income as that individual income rises. So progressive tax, these are direct tax levied directly on income or gain, where a higher percentage of the income or gain is paid as the tax are examples. Sorry, maybe there is an error here. Progressive tax are seen as fairer as they are based on individual ability to pay. An example of a progressive tax is personal income tax. Progressive tax, it is a tax that is charged depending on different level of income. Those who are paid less money, they pay less tax compared to those who are paid high amount. That is the progressive tax. Example of progressive tax, it is pay as you earn. Pay as you earn. The personal income tax, pay as you earn. Pay as you earn is a progressive tax. Then a regressive tax is the opposite of progressive tax. And this is unfair because that is where tax paid is a large proportion of poorer individual income than a richer person. A regressive tax is therefore the opposite of progressive tax and can be argued to be unfair. Like value added and expenditure taxes are examples of regressive taxes, as the amount of tax payable does not depend on the level of income tugiye kugura ikiro cy'isukari VAT, ikiro cy'isukari kikaba kigura 500, VAT ari 8%, umukene bose bishyura VAT ingana. That's what you call regressive tax. Kandi yitwa regressive tax tubibariye kuri incomes z'abantu babiri batandukanye. Ubundi progressive tax ivuga yuko abantu bafite incomes zitandukanye banasora umusoro utandukanye. Regressive tax ikavuga ko abantu batanga umusoro hatitawe kuri level of income. Bityo bigatuma abakene bishyura umusoro, bishyura umusoro representing a larger proportion of the income than rich people. Ko niba ngiye mpembwa 500,000 twajya kugura umunyu nkishyura VAT ya 500, nawe n'undi hembwa miliyoni nawe akishyura VAT ingana n'iyanjye, icyo gihe urumva ngewe tugiye kuri pourcentage wasanga umusoro wafashe pourcentage nini y'umushahara wanjye kuruta pourcentage umusoro wafashe kuri income y'uwo muntu wundi. So which means that those are types of taxes that we reflect to be unfair. These are regressive taxes. Progressive, regressive taxes. The last one is proportionate or flat tax rate, where a single tax rate applies. This is in between progressive and regressive taxes. Okay, we have some flat income and proportionate tax or flat tax. That's when we say you will pay a tax maybe of 10,000, and sometimes it is unfair to different people. So these are there are arguments that proportionate tax are fair than the progressive tax, since everyone pays the same proportion of their income. Others would argue it is unfair on people with low incomes because they are subject to taxes, which is more difficult for them to afford than it is to the rich. Okay? Proportionate taxes are fair than a progressive tax, since everyone pays the same proportion over their income. Oh, okay. Here we apply also a percentage. We apply a percentage. Now, if we have to answer this, capital gain is which type of tax? Are you still here?
Yes.
Yes.
Capital gain, which type of tax?
Proportionate tax.
Proportionate tax. Pay as you earn.
It's
Progressive.
Progressive. Value added tax.
Regressive.
Regressive. Okay. Now, tax suitability. We are remaining with two components to complete the tax issues, and others will be able to read them. Okay. The tax suitability, as we are saying here, the tax suitability, we say for a tax system to be efficient, it needs to ensure equity, it needs to ensure efficiency, it needs to ensure ease of administration, and it needs to ensure predictability. Iki kibazo muri exam ya PFM bakunda kukibaza. Bakakubwira ngo as a CAT students discuss how tax can be suitable. Gira inama government y'u Rwanda ibyatuma tax system yabo iba igaragara kiri suitable. Okay. So the tax suitability means there is equity, and under equity there is horizontal equity and vertical equity. Then equity means different. It is important Okay, this is a perceived fairness of tax. How equitable do members of the public or people paying the tax believe it to be? Okay, it needs to be fair. So horizontal equity and vertical equity. Horizontal equity, that's where people with similar ability to pay have to pay a similar amount. Vertical equity, that's where people with greater ability to pay have to pay more amount of taxes. So for the equity, we say for the horizontal equity, that's where people with similar ability to pay will have to pay a similar amount, as we mentioned. Then for vertical equity, that's where people with greater ability to pay have to pay more. That's what you call vertical equity. That is the perceived fairness of the tax system. The perceived fairness. The perceived fairness of tax. Then, I hope this is clear. Then you have benefit equity in terms of the amount of tax paid being related to the amount of benefit they receive. This is the one, this type of equity, I don't believe in it, but some people will say the tax is suitable igihe abanyagihugu babona, ariko ni nabyo, for in terms of benefit, ni nabyo, abantu bazishyura umusoro bashingiye ku nyungu babona wa musoro utanga. Niba se umuntu atanga imisoro akabona imihanda ntiyubatswe, agatanga imisoro akabona nta matara yo ku mihanda, ntabwo kijya azishyura umusoro. But when he pays tax and he sees everything is being constructed, then the tax will be suitable. Okay. Okay, good. The second characteristic of tax suitability is ease of administration. The cost of collecting the tax should be less than the revenue we receive from tax. Okay, and then efficiency. The tax system should be efficient. Okay. In terms of administration efficiency, as we mentioned above, the tax needs to change the people's behavior. Okay, it should calculate, it should be able to collect tax easily, and you need to put in place systems, tools and techniques that will help you to collect taxes. The last one is the predictability. You would be able to predict the tax system. The individuals or the government can effectively budget the tax to be paid or received. Okay, for government taxation comprises a significant proportion of the income. So tax system should have the ability to make a prediction. We be able to predict the tax that we will generate in the next period to come. Okay. So, reducing the tax evasion. This one we have discussed in the introduction, and I hope everybody knows. In the exam, they will ask you the difference between tax avoidance and tax evasion. Tax avoidance using the management of financial affairs. So, which means it is acceptable, it is legal. It is legal, and the tax regime should be exploited to minimize the amounts of tax payable. So tax avoidance is not illegal. It is acceptable. You may employ your financial advisor to explore the loopholes that are in the tax laws and be able to minimize the tax payable. Whereas tax avoidance is acceptable, tax evasion is illegal. Because it is a deliberate misrepresentation of financial affairs, trying to reduce the tax liability due to unlike tax avoidance. Then the two are different. Tax avoidance, acceptable. Tax evasion, not acceptable because it is illegal. Misrepresentation of financial statements with the aim of reducing taxes. Any questions so far? Yeah? So other source of revenue, they include service charges. These are the services that we pay for. They charge us for the service paid. Like when you are paying to Irembo, you need some service, you need the notary service, you pay some money. This is also a service charge, and the service charge has some of the key advantages. There should be equity. Where you make payment, you receive the benefit. There should be value. What you pay exceed what you receive. The usage, the service quality, there should be quality in the service that we get. Okay, and then again, the same thing, or the suitability of tax, also the system of collecting service charges should be effective. Effective in the sense that we understand that effective charging in the public sector would help the government to collect money in the service charges. Otherwise, if the citizens or the general population perceive that the tax system is, or the service charge system is expensive, they will find some shortcuts. It's going to be cost effective. Okay. It should be straightforward with simple method. Straightforward. It should be transparent. It should be equitable. Wish always should be objective. Source ya nyuma ni grant and other donor aid. Na mafaranga tuvana waterankunga. Grant and donor aid. So under this, for the examiner, for you to understand this, when you are preparing for the exam, take note of the two. The examiner will ask you two types of the donor. It's what you call bilateral aid. We can give you a scenario and you describe whether it is a bilateral aid or a multilateral aid. A bilateral aid, it is the aid that flows from the donor government directly to official government sources in the recipient country. Okay? For example, the amount of money that the government of Germany gives to the Ministry of Finance, that is a bilateral aid. Whereas a multilateral aid, it is a contribution from the government source to a multinational agency. Like the amount of money that the government of the United States of America will give to USAID to be implemented in Rwanda. That is a multilateral aid because it is given to a multinational corporation or a multinational, a multilateral agency to use it to fund the multilateral agency's own programs within our country. Okay. So there are some other fees that form a source of income, like the registration fees, like the licenses, the trading license fees, and the others, including the mineral royalties, even the penalties. When you don't use EBM, they charge you some penalties, okay, for the punishable acts, okay? They charge you fees, fines and penalties, fines and penalties. So I think that is the end of this lesson, unless you have a specific question, but I will give you this for you to review. Anybody have a question?
No question.
Okay. You can go ahead.
Oh, we are not hearing you.
Sorry. So unit 4 is about procurement. Under procurement, this is also not, we don't have too much here. We need to understand what is the procurement and the procurement process. We can do procurement into stages. This one we will need to read because procurement is a major component of PFM. Now, in an exam, the examiner may ask you to explain the 10 key stages of the procurement process, the stages of procurement process. Okay, 10 key stages of procurement process. Let me see. Key stages. Is it there, for example? Ten contents that would the device manager to include in the contract as per RPP guidelines. Is it this one? No. No, it is not. They are referring to this one, the content of a contract. Let me show you. Hope you have them here. You see? When I make this question, the content of applicant shall include, these are the content. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There are too many. They're asking you at least 10 contents. Was man kurada? Contents no muri contract, procurement contract. Actually, let us summarize this before we go. For the rest, I will give you questions and answers for you to read.
Hello, Mr. Jamal. Hello,
Hello?
can you hear me?
Yes?
It seems like the time is almost at the end because we have another session from 5. So maybe you can resume from here and the rest the student will read.
But I think I can share some more of other materials,
Yes,
maybe for the questions,
okay.
for some past papers and propose the answers from the past papers, then they can go through them. Then from there, they will be able to pass.
Yes, I have already gave you the contacts of the students who will sit for PFM exam.
Did you send it on my email?
Yes,
Let me see. Did it come? I only, oh, okay.
Yes,
Like,
from
okay.
Gmail. Check your Gmail account, not Yahoo.
You gave me both PFM and financial accounting.
Yes.
Okay, I can see.
Okay.
But there are too many and only 3 people attended.
So I don't know why they do not attend. Maybe they are
They don't
very
have
familiar
internet.
with it. Most of them are very, very, very familiar with PFM.
Okay. And they are ready to pass it. I hope they will pass.
Yes.
Okay. Thank you, Olivier.
Okay. So thank you for this presentation. It was very wonderful, and I also take this time to thank you. There's 3 or 2 students who managed to attend this session, and I wish success to them. And we may cross from here, and we are going to start another session of that session.
Okay.
Thank you, sir.
Okay.
Thank
Have
you.
a good night, even if we're still at the evening.
Thank you.
Thank
Okay,
you, sir.
welcome.
byaburaga ariko ntacyo ageze neza.
Please ask those questions.